Good morning and welcome to today's edition of Toggle's Daily Video Insights. My name is Jan. I'm one of the co-founders of Toggle, and in today's video we're going to take a deeper dive into one of the many insights generated by Toggle across thousands of US stocks every trading day. For those of you who are joining us for the first time, please, if you'd like to see more of these, subscribe to our YouTube channel, or you can also check out Toggle on toggle.global where you can test drive it for free. Today the focus is going to be on Energy Transfer, a stock we actually looked at quite recently because there have been a smattering of bullish pressures that Toggle has been highlighting in this particular stock, although at the moment it's still waiting for a breakout. The most recent one, which we're going to review today, is actually highlighting that there's been a combination of improvement in economic uncertainty in the US along with some indicators specific to ET that are pointing to potentially quite meaningful upside in Energy Transfer. So let's click on this insight card and we'll take a look in more detail what the analysis is actually telling us. Specifically, what we want to know is what are the drivers, what's the horizon, and what is the uptrend that we could expect. Now, looking at the chart here with the starting point of 804, Toggle is basically saying that the price pressure could see the stock rise just over 12% within the next 12 months. Obviously, as you can see from this confidence intro, it could happen quite a bit sooner, and it could extend quite a bit more than what the median projection would be. Of course, if the stock were to drop below 755, this is the place to reevaluate the thesis and potentially place your stop loss and re-examine the trade, move on to a different trade. Why it might move? Well, this is actually quite an interesting one. You can see that there's this interesting confluence of declining economic uncertainty back to the levels of kind of before previous presidential election, and also the fact that what we're currently seeing is that the vol-adjusted move in the stock price has been comparable to what we saw previously. And so given the drops that we've had before, if you just visually look at these other prior periods, you find that actually this could potentially highlight the beginning of a rally, because just like previously when you've had a move through zero in the kind of a positive upturn or resumption of the upward trend, the stock has tended to extend the rally by 12% or more. Looking at the quality checklist, again, we see that this is one of the better patterns. It has 7 out of the 8 stars. The only reason why it doesn't have 8 is because the episodes don't extend through enough of different expansions and recessions. And finally, looking at the past performance, you can see that actually there's quite a nice skew in or convexity rather, in the risk reward, except there have been days or past periods where actually the stock continued to decline and lost as much as 20%. So it's extremely important that you pay attention to that stop loss, because the upside is very attractive, but so is the downside quite dangerous. And so again, that red line is really quite critical. Now, if you had respected that over time, investing $1 in each of these past episodes, you would have actually ended up with almost $10 of pure profit. So attractive risk reward, so long as you really look after the risk management in this case. So much for Energy Transfer. In the daily brief, we also take a closer look at the latest quirky inflation number and why it's quirky, but why one must take these numbers seriously nonetheless. If you subscribe to it, the email will already be in your mailbox. If you don't, please go to toggle.global and you can subscribe there. Thank you for your attention. We'll see you again tomorrow.